I get scared because every time they say something, it's never what they say, it's always worse.
Hey guys, welcome back to Library of Wealth. Gareth Soloway discusses his predictions for the price of Bitcoin and the crash that looms on the horizon. Soloway believes that Bitcoin is expecting significantly more downside, even dropping as low as $9,000 in the coming weeks. Despite market downturns we're seeing, Soloway also knows that regulation will be a major game changer, and that big institutions may start accumulating Bitcoin as a way to get returns during a prolonged recession. He points out that inflation, initially thought to be transitory, has become a bigger concern, leading to the Fed raising interest rates yet again. With the strong possibility of a crash soon, Gareth expects more fear and uncertainty will actually favor Bitcoin, as people lose faith in fiat currency. Let's get right to the latest interview with Gareth Soloway, as he gives his latest price prediction for Bitcoin and where the crypto and stock market is headed in the coming months. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Think about this in your own lives. How many times out there have we been on our high horses thinking we are the best, we're unstoppable, and then what happens? Some curveball comes into our lives and it throws us off. And that's where the market's all right now. They're in extreme greed, where we're at a point where the investing public thinks nothing can go wrong, and ultimately that's exactly historically, and this is going to historical analysis now, that's exactly where things go wrong. And the problem is that what we know is the Fed continues to probably raise rates later this year. Yes, they will likely pause next week, but they also have, so the government, and check this out, this is not being talked about yet. In the next 3 months, the government will have to sell $1 to $1.5 trillion in bonds to the world. All right, now you ask yourself this. Number one, what interest rate are they going to have to do? Essentially, this is debt that's going to be rolling over, that they have to essentially refinance. So you're taking debt that was probably at a 1% to 2% interest rate. You're now looking at selling it to the public or to the world at around a 5% interest rate. So think about the U.S. deficit and what that's going to do to the U.S. deficit. By the way, there's a reason why when they passed the debt ceiling, there's no cap on it right now. For the next 1.5 to 2 years, no cap whatsoever, because you have all these factors here going on where they have to unload a ton more debt to keep the merry-go-round going. So now you're talking about how much is going to be sold to the world, and then what interest rate is that going to be at? And again, is that a headwind? Well, I would think so. Then you take into account, and I had a great Spaces last night, verified Spaces, by the way, every Tuesday night at 7 p.m. We had an amazing group of experts on last night. We were talking about the commercial real estate market and what a massive, massive collapse that could be. So ultimately, that's coming later this year. We know the banks are already stressed. We know banks have failed already. Now you throw into the mix the commercial real estate crash. Now you go back to the Fed saying, hey, listen, we're going to have a mild recession. And I said this before when they said this, as soon as they say mild, I get scared. I get scared because every time they say something, it's never what they say, it's always worse. You could go back to 2007. Oh, it'll be, a minor correction, real estate will correct. That's fine. Well, look at what happened, the Great Recession. We had massive downside in the markets, collapses every which way. You go back to transitory inflation. What did that turn out to be? So everything they do, there's always this miscalculation. Whether it's hopium on their part or not, it's miscalculated. So you have to say to yourself, all right, if we are going to continue to see this economic data, now jobs have been staying strong. That's the one positive in this overall picture. But the other side of it is the other economic data is absolutely weakening. So again, when all is said and done, you look at the second half of this year, I have it priced in number one. By the end of the third quarter to fourth quarter, we will be in a recession. The stock market by the third quarter, which we're getting close to, right, will be putting into an effect essentially where we're going to be, the stock market will start to price that in. People are acting like this is a new bull market, but we're not at all-time highs. So last time the VIX was at 14, we were at all-time highs, crypto was at all-time highs, the stock market was at all-time highs. Now we're basically at those same levels on the VIX, but the markets are lower. Again, that's a negative divergence. So that has me concerned as well. It's essentially people being as euphoric as they were at all-time highs, but were not at all-time highs. Essentially, people are getting conned into this belief by the psychology of the market. So you have all these people talking about deflation. That's not going to happen. And I'm going to tell you why. It's not going to happen because the reason people are making more money is because the general wage got raised. We know people that were making $12 went to $25 per hour. All right, that is going to be sticky. You can't start reducing people's wages. Once you set them at $25 an hour, you can't bring that down. That's going to keep inflation sticky north of 3%. With it north of 3%, ask yourself this: when the heck is the Fed going to cut rates? How can they cut rates? And you might say, well, oh, they could cut rates, no big deal. Well, if you're at 1.5% and inflation jumps to 9%, now if you start at 3, where is inflation going to top out? 15%? How are we going to feel about that? I don't think the Fed wants to do that. They're going to be very reluctant to lower interest rates. Now, right now, markets, are they pricing in anything like this? And the answer is absolutely not. All right, so those are a couple things. Now, I want to get to Bitcoin, right? I want to talk a little bit about Bitcoin here. Bitcoin having a beautiful reversal yesterday. So essentially, you have to understand the metrics going on. 2 days ago, the SEC sued Binance and they levied some really serious accusations. If these accusations are true, that's cataclysmic for the crypto markets. Now, what I find fascinating here is you essentially have a market that yesterday rebounded and negated that move. Now, to me, this is an interesting dynamic. And I'll tell you the dynamic that honestly makes me intrigued, is that you have a crypto investing public that essentially is saying, no, we don't believe. The SEC has lost credibility to the point that when they say that Binance was doing shady things with funds, we're not going to believe them. Because if this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. All right, so you have investors that are coming in and saying no. Now, granted, yesterday the SEC sued Coinbase. Now, remember, there's a difference here. The Binance stuff, the allegations were really bad. Coinbase, the SEC was just saying, hey, you're allowing people to trade unregulated securities. That's nothing new. We knew that already, right? The SEC had already said that, hey, listen, everything but Bitcoin's essentially a security. Okay, well, if they already said that, then yeah, you're right. Coinbase is letting people trade unregulated securities. So I think that's one of the keys, is also when people started to realize that, that's when they got to a point where they said, all right, shorts started to cover, you saw a little push up, and now we're popping up. But if we go to the charts here, what I wanted to talk about here is the chart basis. What is the chart telling us? Because that's all news. And you guys know, yeah, I pay attention to news. I think even technical analysts and technicians need to know what's going on with the news. But what we need to do is say, what is the chart telling us? And the chart's very simple. The chart is saying that right now we are holding this area of support. And I want to draw a trend line in here. As long as you hold this general area, and if I put a line through this low right over here, we can clearly see that we closed that down day on Binance right at that level. We then rallied back up. So we're stuck between a range. Now, this is your upside resistance, very clear right here. This is your downside support. If support breaks, we're going to 24,000. That's your next target.
Soloway suggests that there is a general lack of understanding about how the economy could naturally recover from a recession, as investors have become so reliant on the Fed's interventions. He does see signs of trouble in the economy, such as skyrocketing credit card debt and car loan defaults. He predicts that these issues will lead to a recession in the second half of 2023, which he believes will be long and drawn out. Soloway expresses concern about the potential negative consequences of keeping interest rates high for an extended period, such as a major recession or even a depression. He also points out the impact of reliance of the markets, economy, and cautions about the Federal Reserve's stimulus measures and implementation of quantitative easing. What do you think of Gareth Soloway's recent market prediction and crash for Bitcoin, crypto, stocks, as well as the direction the Fed is going in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.